Hello guys and welcome. In this lecture we are going to talk about volume divergence and how you can use it, of course. First, what is a volume divergence? Volume divergence is when price is making a higher high but the volume is making a lower high, right? Let me draw it quickly for you. So imagine that this is price and then price is making a high, higher low, higher high, higher low, and then higher high, right? But the volume, let me draw the volume with this so you understand better. So the volume is increasing, right? It's increasing, and then it's starting to decrease, right? So basically, this is a divergence. I draw it a little bit like the stochastic or like stochastic, right? But I just wanted to show you. So basically, when the volume is making a lower low, while price is making a higher high, this is a divergence. And on the opposite side, if price is making, oh, not this one, we need the Elliott waves. If price is making something like this, right? And then the volume, again, the volume here, the volume is declining, right? Basically, oops, this one. The volume first here is like this, let's imagine, and then it's already like this. So volume is decreasing, and basically you look at the volume as a sign of strength. Let me even write this, probably you won't understand this better. So volume means strength. So I don't have to type this for you. You already know that volume means strength, right? So when the volume is decreasing, it means the momentum, the strength is going down. When the volume is increasing, it's going up. That's a good sign, right? When you see price making a higher high with a higher volume here, there is no divergence. This is actually a very good sign of strength, and you can be confident, right, in the move. On the opposite side, when the price is making a higher high but the volume is dropping, this means there is no enough strength and a reversal is possible. So what you will see after this, typically you will see a reversal, right? So this is why it's so beneficial. And here is the same. If the price is making a lower low but the volume is dropping, not good, right? You want the volume to be rising. If it's dropping, you have a divergence, and it's likely you will see something like this, right? A reversal. Now, how can you use that? Again, you can use it to enter a position, but with confluence of reasons. You should not use it as a single reason, right? You have to have confluence. For example, if you see, let me remove all this. If you see price again rising like this, and you know that it's reaching a resistance zone, let me make this red for you. And now you see the volume declining, which, what does it mean about the strength, guys? It means that it's losing strength, right? Where is the brush? So between this high and this high, the volume is doing something like this, and then it's already here, it's dropping, right? We can move this a little bit like this. So price is making higher high and it's going into a resistance, right? It's fighting a resistance. This is a confluence of reasons, so you can look for a short here and to short, right? But don't use this as a single reason. Or some other reasons you can use, for example, divergence also in the RSI or stochastic, some momentum oscillator, some indicators. You can use this basically as an entry with confluence of some other reasons, and as an take profit or exit, you can use it as a solely reason, right? So if I'm on a trade and I see this, I'm exiting, right? I'm exiting. I can re-enter later on if I see a reason to, but definitely I will exit if I see this. And it's working very, very good for me. That's why I'm sharing it too. I like to give you practical uh, info, right, that you can use and that you can apply. I'm using this, so I know that it's working very well. On the same is on the opposite side. If, oops, let me draw this for you. if you are in a downtrend and then here price is reaching support, let's make this green for you, and you see divergence in volume between the low price is making a lower low, but the volume is making a lower low as well, right? The volume is dropping, it's here and then suddenly it's somewhere here on the lower low. There is again a divergence and you better take profits, or you might look for entries. I mean, if you are in a short, you can take profits and exit, or you can look for entries. Now, oops, let's delete all this and we can look at some examples in the chart, right? So you will, of course, you will notice it, and let me first make the volume thicker so you will spot it better, a little bit more. And then you can put a moving average on the volume if you like. Volume moving average, you just click here and it will show on your chart. So this will help you visually to see where the volume is. So what you will notice right now is there is a wave. Oops, let's just go closer. So there is a wave up. There is an impulse wave up. Then you have a down move, correction, right? And there is another impulse up. What you will notice quickly, the one that are sharper view, will notice that the volume here. Let me first get rid of this this one that is showing here because it's annoying, right? Where is it? Navigation, always invisible. Okay, sorry for that. I just wanted to get rid of this panel here. As you will notice the volume here, you see these spikes, and look at the volume here on this move up. It's dropping, right? So you are seeing a higher high and then higher and higher and higher, but the volume is dropping, right? As you will see, divergence. So you better take some profits because you see what happened after that. Now another good example right here that I noticed. You see move down, I mean impulse move down, then correction, then a lower low. In the same time, what is happening with the volume? Look at this high volume right here and look at the volume on the lower low. It's lower closing low, even went on a lower low. Yeah, look at the volume here. You see the divergence, right? Actually, yeah, it was even below the moving average here. It started to go above, and you see the people who spot that, what happened after that, bam, bullish engulfing. This is another signal that this is basically, you can use this as a confirmation. When you see a bullish engulfing, then you can just look for basically trade out of this. Another example, we can look through many examples all day long. You will see that it's working very well, right? So you have the move down, impulse, then a move up, and then another move down, which makes a lower low, right? You will see that price makes a lower low, and volume again also, it's making a lower low. You see this in volume. See right here on this candle, the volume is higher than this one, right? And what followed after that, bam. And of course, sometimes you will get something like this. This is confirmed, like basically, but also but it's okay. Maybe this one I will share with another video. This is not about right now. Let me show you another example right here in front of your eyes. Move up, correction, another move up, higher high. What's happening with the volume? Bam, divergence. Yes, it did not reverse, but it still gave you a nice trade, right? You could have taken some profits it fell 13% almost, and you could have re-enter here if you saw a reason to re-enter, right? You might apply many other techniques and strategies. It doesn't mean that always that when you see divergence in the volume it will go to zero, right? And it will reverse completely. Sometimes it will not, of course. Sometimes it will not even work out, of course. But this is why we have a stop loss in places and all this stuff, and you have confluence of reasons and all this stuff. But I want to show you how effective is this, right? So just train your eyes to spot it. Another one. Impulse, corrective move, another impulse with lower low, divergence in volume. And what's soon to follow, you got the bullish engulfing right here, and it gave you a nice trade. And of course it did not reverse here. You see, this is one good example where it did not reverse, but it gave you still a nice trade that you could have played. This is another one. This is actually another good example because this is equal in volume. But still there is a divergence, right? Because you want higher volume. When price makes a lower low or a higher low, you want higher volume to confirm that this is real, right? And for a sign of strength. This one is not showing sign of strength, and what you will see that follow, bam. Same thing here on the opposite. Basically, let me draw this for you because I'm not sure if you are looking where I'm looking. I'm looking here. Let me just make this black so you will notice it better. And I'm looking here. And I'm looking impulse down, corrective move up, another impulse down, price is making lower low, divergence is making equal low, a little bit lower, divergence, bam. Another great example that I can see right away. You have to train your eye to notice this, right? You have to train your eye. Probably some of you are noticing it and are using it. Move up, a little bit of a correction, sideways, another move up, and it's a solid move up, right? But how solid it is? The volume is telling us how solid. Not very solid, right? Look how high the price is here. Volume is the same, equal. So this is not sign of strength. You have to be aware here. If you are in a long, that's perfect. Now, when you see this, it's time to take some profit, right? It's time to take some profit. It can run on you and run a lot more, but you protected yourself and you took some profits, right? This is the importance. So I think you already have understanding how to use it, so I can cut this video for now. I hope this was useful to you.